Hello everyone. So welcome to one more video in the playlist on accounting cycle. So this what you see on the screen, this one I found a simple online search. I did Google image search on accounting cycle and you will find hundreds of images, and one of the image I found online, I just took a print and then I wanted to show you. So this is what we mean by accounting cycle. So you're identifying transactions, recording transactions, posting to general ledger, calculating trial balance, making adjusting entries, creating adjusted trial balance, and creating the financial statements, and finally making closing entries so that you again go back to the reset, and for the next cycle again you identify the transactions and do the same. So far in our playlist, almost 7 to 8 videos have been recorded, and we have been doing this part, identifying transactions and recording transactions and posting to the general ledger. Okay, so now we'll also see in this video how to do the unadjusted trial balance. Okay, so we'll make the trial balance, and then once the trial balance is made, how to make adjusting entries and how to do the adjusted trial balance, all these things we'll see in the future videos. But in today's this video, we are going to see this part, adjusting trial balance, the fourth part. And if you are coming directly to this video, please refer to my earlier videos in this playlist, and we are doing this by solving series of problems, and the problems I am taking from a textbook, as I already mentioned, called Financial Accounting, 7th edition by Kimmel, Vegant and Kiso. This is by Wheelie Publications. Okay, so you can get this book, and there are hundreds of problems in this book. So from that, some of the interesting and more difficult problems I'm selecting and I'm doing in this particular YouTube series. Okay. So coming to this video, so what we will be seeing is this particular problem, where we'll learn how to create a trial balance. But before creating the trial balance, you need to have the journal entries. So that's what you see instruction A. Journalize the transactions including explanations and post the ledger T account, and finally prepare the trial balance as on April 30, 2014. Now you can pause the video here, and if you already have some idea about it and you want to practice, you can look at the data and then try to answer it yourself, and later you can compare your answer with my answer, what is the trial balance, etc. Or if you are learning for the first time, just follow along with me. I'll be doing the journal entries and I'll be doing the T accounts, and finally I'll be doing the trial balance. Okay, so let us start this problem. So problem 358. Okay, so what I will do is start with the question number, and Foyle Architects. So always start with the company name, and then they started, okay, architects as licensed architects on April 1st. During the first month of operation, the business, these events and transactions occurred. So this is the first month. So we need to journalize these transactions. Okay, so how to journalize these transactions? So we say general journal, page number J1, and we have the pretty standard columns. Okay, that is date, account with explanation, and we have reference, and we have debit and credit. Okay, so again let me make some lines. Okay, so let's start recording these transactions. Now here one small thing that is there, the company uses these accounts: cash, accounts receivable, supplies, accounts payable. So like this, some accounts are already given. So this is good. If this information is given, you can utilize it. So let us see what this is. So I have cash. Okay, so here on the heading I will say general ledger, or it's also called T accounts. So I will start with cash. So typically for cash you give some more place, and what is the next one? Cash is done. Accounts receivable. Okay, so I will say here accounts receivable. Then next one is supplies. Okay, so let me do supplies here. So these are T accounts. As you can see, it's a T shape, and the left side is debit and right side is credit. Okay, we'll come to that soon. And accounts payable. Okay, so and what else we have? Unearned service revenue. Okay, so unearned service revenue. Okay, and common stock service revenue. Okay, so I have common stock service revenue. What else do I have? Salaries and wages expense. Okay, so let me write that salaries and wages expense. And finally rent expense. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so I have all these accounts also ready. Anyway, this was needed later, so let's do it right now. And here, in order to identify this account, I can give a code number. Okay, so typically 101, 102, 103. Okay, so these three are current assets. So I'm giving 101, 102, 103. This is company specific, or in general, you can give any number. And then accounts payable, let's call it 201, unearned 7, 202, and common stock is 203, service revenue 204. And then expenses, let's call it 301, and then 302. Okay, some just numbers. Okay, so these numbers will be mapped to this reference column so that your journal and T accounts are matched. That will be the purpose of it. Anyway, let's come back to this. Okay, so this is our problem now. Let's do the first one. Stockholders invested 18,000 cash in exchange for common stock of the corporation. So obviously cash is debiting. So on 1st April, cash is debiting by 18,000 and common stock is crediting by 18,000. Okay, so as a good practice, see, cash we gave code number 101, so I will write it here, reference 101, and for common stock 203, I'll write here 203, so that we can refer these two, we can match these two later. Okay, so this is about the first transaction. And why cash is in debit? Because cash is an asset and increase in asset should be debited, and common stock is a liability or it's a equity, and increase in equity should be credited. So again, if you see my previous videos, I have explained that here. So dividends, expenses and assets, if they are increasing, so increase means debit, decrease means credit, whereas here increase means credit. So increase of this three means credit, increase of this means debit, and the opposite. Okay, anyway, so let's go back to our next transaction. So hired a secretary receptionist at a salary of 375 per week, payable monthly. Okay, so basically here the hired is a keyword. When you are hiring, the salary is decided but not yet paid. Okay, so it's payable monthly. So right now only hiring is the task, so nothing, no financial transaction here. So let's do the next line. Okay, so therefore there is no transaction in this one. Let's go to the next one. Paid office rent for the month, that is $900. So when you're paying rent, that means it's an expense. Okay, so therefore here on 2nd April, you are saying rent expense will be debited by 900 and your cash will be credited by 900. So we know that cash is already 101. Now rent expense here, if you see, we have given a code of 302 here. So that I will write here 302 for the rent expense. Now that is done. Next, third one, that is the fourth one, that is April 3rd. Purchase architectural supplies on account from Burlington Company at $1,300. Okay. So we are purchasing supplies. That means supplies is an asset and asset will increase. That means asset will be debited. Therefore, on 3rd, your supplies asset will be debited by 1300. So the supplies having a code of 103. So I'm giving here 103. Now, but this is you're purchasing on account. You're not paying money. So it is accounts payable. So accounts payable is a liability, and increasing liability is again comes under credit. So it will be credit here. Yeah, so the accounts payable is created by 1300 and accounts payable was given a code of 201. So I'll write it here. Okay. Now here we can just, for our reference, you can write it from Burlington Company, or supplies are from Burlington Company. In fact, for every transaction you have to write an explanation, but just to save place I am not writing. Anyway, let's continue. That is this one. Now on April 10th, completed blueprints on carport and billed the client 1900 for the services. So here you are done. See, yours is a architect company and your one of your services or your deliverables is blueprints on a carport and you are billing a client for 19. That means this is a service revenue 1900. But service revenue increasing means credit. Okay, so therefore service revenue will be 1900 under credit. Okay, so increasing of revenue means credit. Okay, so again remember that. So if you go back here, revenue increasing, that means it has to be a credit entry. Okay, so you earned a revenue of 1900, but in what format this revenue has been earned? So we are just billed. Okay, so we are just billed. The payment has not yet come. Okay, so it will be accounts receivable. So this will be for carport, for blueprints. So how much will be the accounts receivable? 1900 debit. Accounts receivable is an asset. Increasing asset is a debit. Okay, so let's write the numbers for this. So service revenue is 204 and accounts receivable is 102. Okay, so 102 and 204. Okay, so this is optional. If you like, you can write it, or if you don't like, you can just leave it. So for example, for the previous problems, I kept the reference empty and then I am just writing this. But here, just to show you how it is done, I am doing. Okay, that is 10th. Now 11th April, received 700 cash advance from J. Madison to design a new home. Okay, so you are receiving an advance, but your service is not yet performed. So therefore, it will be unearned service revenue. It is not yet received. So it's not yet performed. So here, since you received money, it will be shown under cash. Okay, so that is 11th. You have cash. Cash is 101, and it is debited by $700. Now unearned service revenue. So in the month of April, you are not doing this. You will be doing it sometime in future. So that's why here we will record as an unearned service revenue, and that code was 202 and 700 will be the amount. Okay, let's continue. That is this transaction number 11. Next, received 2800 cash for services completed and delivered to M. Svetlana. By the way, you can also write all these things here. So in the for the previous case, J. Madison, just for your reference, you can write that. Now on 20th April, what we are doing? Received cash for services completed. So your services are also completed and delivered. So therefore, your cash increased by 28. So your cash will increase by 2,800, and your service revenue will increase by 2,800. So this is a simple service revenue and cash. So service revenue increasing means credit, cash increasing means debit. Okay, cash is 101 and service revenue is 204. Just to write the code. And here we can say from M. Svetlana. Again, just for your reference. Okay, so that is this. Now 30th, the month has ended. So paid salary secretary receptionist for the month 1500. Okay, so this is a salaries and wages expense. Okay, so expenses means again expense increase means it will be debit. Okay, so on 30th, salaries and wages expense, and that will be debited by 1500, and your cash will credit by 1500 because you are paying with cash. Okay, cash is 101 and salaries and wages expense is 301. Okay, so here I'll write 301. All right, so we got that. And the last one, paid 300 to Burlington Company for accounts payable due. Okay, so we have an accounts payable due here, right? If you see accounts payable, 1300 was due. So out of that, only 300 has been paid. So now this is a decreasing of liability. Decreasing of liability will be debit. Okay, so 30th, so we'll say accounts payable by debit by 300, and then cash will be credit by 300. So cash is 101, accounts payable is 201. Okay, so here we completed all the transactions mentioned here. Okay, so like this. Now journalize the transactions. So this journalizing the transactions is completed, including explanations. Okay, some explanations we are given. For each and everything I did not give, but some explanations I given. Okay, now posting ledger accounts. Okay, so now these things should be posted. Okay, so now first let's look at the cash. So here, wherever cash account is there, those numbers I have to put it here. Okay, so you see here, I can do it like this now. So 101, 101, wherever you see 101, that is easy way to identify the cash transactions. Okay, so 1, 2, 3, 4, 5, 6 transactions are there on cash. Okay, so let us do that. So this one is debit of 1800. Okay, so 1800 is 18,000 is debit. This is on first. So I can write date and debit. Debits on the left side, credits on the right side. So this one is done. Next, credit of 900. Okay, so that is on second. 900 is a credit. Okay, that is done. Then we have 700 is on the debit side. Okay, so this is on 11th. So this we have considered. Then I have 2800 on the debit side on 20th. 2800. I'm sorry. Next we have 101. So cash credit of 1500. Okay, so here that is on 30th 1500, and again on cash credit 300 on 30th. So we have like this. So all the 6 entries of 101 I am able to get it here. Now find the balance. Okay, So what is the balance? So add all the debits and subtract all the credits. Then whatever balance comes is your final cash balance. So let me do that in one step. So we have 18,000 plus 700 plus 2,800 minus 900 minus 1,500 minus 300. So I am getting cash balance of 18,800. So like this, you have to calculate the balance of all these accounts. Then it becomes posting of. So basically, what I am doing right now is called posting. Okay. So let's look at accounts receivable. I'm sorry. So 102 is the code. So 102 is here. That's it. There's only one place we have the accounts receivable. That is on 10th, and 1900 is the debit. Okay, so on 10th 1900 is the debit, and the balance itself is 1900, so no need to write separately balance because only one transaction is there. Now let's look at supplies. Okay, so supplies is here 103 and nowhere else, only one place you have the supplies, 1300 debit. Okay, so that is on 3rd. I'm sorry. Yeah. So next we have accounts payable. So 201 and 201. Two places I have accounts payable. So credit is 1300 on 3rd. I'm sorry, yeah, accounts payable. 1300 credit on 3rd. And on 30th I have 300 debit. So what is the balance? So balance is 1000 because 1300 minus 300 is 1000. So it's a credit balance. Account payable is a liability. Liability will have credit balance. Okay, next one. Let's do common stock 203. So here 203 is there, and only one place it is there. Common stock of credit of 18,000. Okay, so on 1st. So 18,000 credit. Okay, so no need to calculate the total. Next we have unearned service revenue. So 202 is a number. So only here I think we have unearned service revenue of 700 credit. I'm sorry. Okay. Next we have service revenue. So I have 204 here, 204 here. Two places I have service revenue. So here service revenue on 10th, it is credit of 1900, and again service revenue on 20th is credit of 2800. So total balance will be there here. So 1900 plus 2800, 4700 is the revenue balance. Okay, that is on the credit side. Okay, so now two more are there: salaries and wages and rent expense. Salaries and wages on 30th 1500 was debited. Okay, so this is on the debit side. So again, be careful whether you are writing debit side or credit side. You have to be very careful. And if you remember, expenses will be the dealer. If you remember, so expenses increase means debit side. So it will be debit. Okay. Anyway, and rent expense 302 900 is the rent expense on the debit side. This was paid on 2nd April. So now I got all the my general ledger completed. Posting is completed. Okay, so here posting is completed. So here I will write posting. So once you do the posting of T account, if you see here, recording the transactions that in the form of journaling, and then post to the general ledger. This part we have done. Now calculating the trial balance is there. Okay, so trial balance is nothing but all these accounts I take and then I'll make it and write it in one place. So again, to just since we got all these accounts from here, the same thing I will write here. So let's see. Let's call this a trial balance. Okay, so the company name Foyle Architects. And the date is 30 April 2014. So here it is mentioned. So trial balance. So in trial balance, what you have to do is simple. You have account and you have debit and we have credit. Some of the accounts will have debit balance, some of the accounts will have credit balance. And what are the accounts? So here you can see cash, accounts receivable, supplies. So these three are done. Accounts payable, unearned service revenue. Common stock, service revenue. Salaries and wages expense, rent expense. And if you want, you can even write the code numbers here. See, we had given 101, 102, 103. And for accounts payable, we have given 201, 202, 203. Then service revenue is 204. 301 and 302. So just for our interest, we can write that. Now, what is the total balance in the cash? So you look at the cash, total balance is 18,800. That is under the debit balance. Okay, so 18,800 under the debit balance. Now accounts receivable. So accounts receivable debit balance of 1900. Okay, so supplies. Okay. So supplies has a debit balance of 1300. Accounts payable. Okay. Sorry, accounts payable. So here accounts payable has a credit balance of 1000. Okay, so here again make sure where you are writing. Unearned service revenue. So unearned service revenue has a credit balance of 700. Okay, so credit balance of 700. Next, we are having common stock. Okay, so common stock has a credit balance of 18,000. Okay, so here credit balance of 18,000. Next, service revenue. So we have service revenue credit balance of 4700. Sorry, 4700. That is credit balance. Now salaries and wages expense, 1500 debit balance. So here we have 1500 debit balance. Rent expense. I'm sorry, rent expense is 900. Okay, so these are all my trial balance accounts. So let's calculate the totals now. Okay. So 18,800 plus 1900 plus 1300 plus 1500 plus 900. So I am getting $24,400. So this is the total debit balance. Now let's look at total credit balance. 1000 plus 700 plus 18,000 plus 4,700. So again I am getting 24,400, which is exactly equal to the debit balance. So finally this is called the trial balance of Foyle Architects. So in this particular so what is the use of this trial balance? I can use this trial balance to create financial statements, to create income statement and the other things. Okay. So what are the steps? I have been given some transactions. From the transactions we have done the general ledger. From the the journal entries. From the journal entries we have done the general ledger. From the general ledger we have done the trial balance, and finally the trial balance is matching. So I hope you are finding these videos interesting. So we have done up to fourth step now. We identified the transactions, we are recording the transactions, posting to general ledger and calculating the unadjusted trial balance. So this is what is called as unadjusted trial balance, but anyway we can simply call it trial balance. So how to do the adjusting entries and all that we will see later in the future videos in this playlist. So I hope if you like this, please press the like button and you can subscribe to my channel. Thanks for watching, and more videos will be there. See you later.